All right, so far, guys, with taxes, we've looked at like W-2s, how that's calculated, all those different taxes. Now we're going to actually file your taxes. So the form that you fill out for the government is a 1040. That's why your tax booklet says 1040 at the top. Okay, so that's the 1040 form is what you actually fill out for the taxes. All right, so your employer will withhold taxes from each of your paychecks to pay your federal, your state, and your local, right? You guys know that. That's why your paychecks aren't as big as you'd like them to be when you bring them home. By the end of January, you should receive a W-2 from your employer. Shows how much money you made the previous year and how much in taxes was withheld. You will use your W-2 and possibly other tax forms to file your taxes. Okay, so we've talked about a W-4. What's a W-4? Good, you fill that out when you get your job, right? That's how they know like how much to withhold from your check each time. Like if you're claiming 1, claiming 0, or whatever. All right, W-2 you get back in January. It tells how much money you made for the year and how much taxes were taken out. And then you will file a 1040 once you get your W-2s back. That's your tax return that you kind of fill out and send that into the government. Logan. Mm-hmm. If you claim 0, they're going to take more taxes out. Um, the higher the number you claim, the less taxes they take out. But that can come back and bite you in the butt in the end, especially as you get older and no longer get everything back. The more money you make, like you'll pass into a bracket where you don't get everything back anymore. And since you're working quite a bit, you may push yourself to that. So if you don't let them take enough out throughout the year, then you may end up owing come January, which we want to avoid that. So if you claim 0, that's good. You should be fine. You should get a nice return at the end. All right, so how do you know if you need to file a tax return? Okay, so whether or not you must pay taxes depends on whether your earned, unearned, or a combination of income exceeds certain limits. So earned income is obviously what you make at your jobs. What's unearned income? No, it's not money you steal. So, and that would still be earned. Anybody ever play the lottery? That's not earned money, right? That'd be like winnings. So unearned would be like lottery winnings, things like that. It might also be like your stocks, like if you make money in your stock market. It's not money that you physically went to a job every day and earned like per hour. Okay. Sure. Can be great, can be terrible. It's up to you. I don't do anything with stock market. Now my neighbor, he does the stock market all the time. Every time I walk past his house, he's sitting in his front room at his computer, like doing stocks. All he ever does. Yeah, they make good money. I don't know how much he makes from stocks. What's that? What? He's my neighbor. Go for walks. I walk past his house. What? His front window, like in the front of his house. There's no curtains on it. It's not like I'm spying on him. I just walk by, I can see the computer screen on. I'm sure people look at my house too. All right, guys. We're off task. You guys ready for come back to me for taxes? All right, so earned income, money you make from a job, and then unearned income, money made from interest or dividends from investments, that's your stocks. Could also be lottery winnings and things like that. So if your earned income is more than $12,000 and you are under 65 years old, you must pay taxes and file a tax return. So at your guys' age, you usually get every bit of the taxes that you paid in, you should get back. Because most of you probably don't make more than 12,000. Some of you do. What? No, it's not why. All right, if your earned income is less than 12,000, you most likely do not pay taxes and should file a tax return to get a refund of any federal income taxes that were withheld. So that's why with you guys, if you're not making more than 12 grand a year, then you should get everything back. Now, you're working 40-hour weeks every other week now. 42 and a half, okay? So chances are you may make more than that, so it's a good thing that you probably claim 0 on that. Okay. But yeah, if you make less than 12,000, you'll get everything back that you paid in. I think he means just as like a high school student having a job kind of thing, not as a career, because yeah, that's bad. Yeah, it's like nothing. All right. So why do you need to file a return? I can get money back, right? So you file a tax return to see whether you owe the IRS money because you did not pay what was required, guys, or you can get a refund from the IRS because you paid more taxes than required. That is what we're always hoping for, right? I know my neighbors that I reference, they make a lot of money. They both have really good jobs. They pay every year to the IRS. They always pay. You, even if you quit that job or worked numerous jobs, you still, come January, will get your W-2s from all the jobs you worked at for that year. So you would have filled out a W-4. You should have. That's not good. Legally, they have to have you fill out a W-4. That way they can file taxes and stuff. I'd be interested come January if you get anything from them. So stay tuned. Wait till January. Oh, then that's not good. That's not good. All right, so what do you have to file? So everyone files the same basic IRS tax return called a Form 1040. W-2 is what you get in January that has all of your income, all of your taxes you paid for the whole year. It's like a summary of your pay for the year. That's what W-2 is. 1040 is the form you will fill out and send into the government after you get your W-2 in the mail. Okay, so you'll get a W-2 sometime by the end of January. You get that. It says everything you've made, has all the taxes you've taken out, and then you have to fill out a 1040 form. That gets sent to the government. They double check everything, and then they'll either give you a refund or you have to pay in, depending if they held out enough taxes or not. So additional forms called schedules, there's like Schedule A, Schedule B, there's a whole bunch of them. They may have to be filled out for unique situations or to itemize. Now, the way the tax laws changed last year, I used to itemize every year, meaning like I specifically write out like where all my different funds went, if it went to like schooling, if it went to pay my mortgage, if it went to pay, all this different stuff. And then I used to be able to get a bigger tax return. But now they set the limit on that so high that it's like impossible to hit that. So I don't even itemize anymore. It makes my taxes so much faster. I don't get as much back, but it's faster. So Schedule 1, if you have additional income like unemployment, prize or award money, gambling winnings, if you have deductions such as student loan interest, self-employment tax, or educator expenses, you fill out Schedule 1. So I fill it out every year, but since that limit of like you have to hit this dollar figure in order to have this count for you, it doesn't usually affect me. But like I still pay my student loans, my husband does as well, so we have that. And educator expenses, as a teacher, I can deduct so much just for things I spend in my classroom. Of all these forms, IRS allows the taxpayer to round monetary entries to the nearest dollar. Now, this is important. Okay, so when you fill out a 1040, right, you're filling out your tax form in January to send in, you do not put change on it. Okay, so make yourself a note. So on a 1040, no change. Round to nearest dollar. Okay, so if I made, I don't know, $50,000.49, I'd write $50,000. If I made $50,000.51, I'd make $50,001. I'd round up. Okay, so it always rounds to the nearest dollar. So that's nice though, because you guys know when you're doing all these calculations, typing things in the calculator, you sometimes type a wrong button in there. So it's easier if you take off the change. All right, so things you need to know. So you must fill out your name, your address, your social security number, and your filing status. Do you remember what filing status was? Good. Single, married, filing separately, married, filing jointly, or head of household. So you must also supply information about family members that you support financially. So you have dependents, a person reported on your taxpayer's income tax form that a taxpayer supports financially. So your parents, they support you guys. So then you are a dependent on your parents. For me, I have to fill out 3 of them because I have 3 kids. They are all dependents of mine. And a reminder of your filing status: single, married filing jointly, married filing separately, or head of household, which we've talked about already. What do you guys file as? Single. You guys are single. I don't think anybody in here is married, right? No, are you married? That I believe. All right. So the other thing you need to know is taxable income. And we've talked about this. We've used this word. You had to find it on your quiz yesterday. I asked about your taxable income. If you think about the W-2 form that we were filling out on the quiz, right, where I gave you one of the boxes and you kind of had to work and fill in like box 1, box 2, box 3, box 4, that stuff. This was box 1. This is the taxable income. So it's the difference between your adjusted gross income and your deductions, right? Remember those like E or whatever we had on there, like they put into a cafeteria plan, they put into a retirement account. Those were deductions. And then we subtracted those off and we put our answer in box 1. All right, that is the number you look up in the tax booklet. Okay, so that's important to recognize. This is the number that you look up in the tax booklet. It's your taxable income. That's in box 1. Right? That's the number that you're looking at. All right, so you filled it all out. Now what? So you have to sign it, you date it. If you're doing it online, because I always do mine online, at this day and age, most people do. But then you have to do, like, a lot of times they allow you to do an electronic signature, so you can do that online. Once your tax return is complete, you have to file your return or return it to the IRS by, what's the date? April 15th. You can do it electronically or you can do it by mail. Okay, so you have to have it done by April 15th. That's so nice of them. As long as you get a return, right? You should. All right, so here we go. Number 1, Avery's employer withheld $21,639.90 in federal income tax. After completing her return, so she filled out her 1040, Avery's determined that her tax is $23,984.32. Will Avery get a refund, or does she owe the IRS, and how much? She owes, you're right. They withheld $21,000. She did her taxes, and she owes $23,000. So how much will she still have to pay? We just need to subtract them. Right? So we just need to take the $23,984.32 and subtract $21,639.90. I do not. So the difference is $2,344.42. Does she owe or does she get a refund? She owes. Yeah, so you have to, and we'll go through, we'll fill out 2 1040s today. We'll actually file 2 people's taxes today, and then tomorrow we'll do like 6 of them. Okay, we'll get a lot of experience with it tomorrow. We can't file yours yet. You don't get your W-2 until January. But you know what, guys? We'll still be in class together in January. So we could always talk through them. You'll get 2 W-2s. Yep. And sometimes you get one right away, and then it takes you to like the end of the month to get the other one. You can't file till you get them both. Yes. Fine. Can you get that going? They should mail them to you by the end of January. Legally, they have to have them to you by the end of January. All right, number 2. Anthony is an architect who also works part-time as a zookeeper. Interesting combination. Information from his tax worksheet is wages from the architect job, so over 78,000. Wages from the zookeeper, 13,000. Bank interest, 329.42, and stock dividends of 532.52. What is Anthony's total gross income? We just got to add them all up. So income, though, is not only the jobs, but any other type of money that you somehow got. So he also got money from stocks. He got it from bank interest. So all of that is considered income, money that he got. Yeah. From doing the stock market. Yeah, so he's purchased stocks at some point, and that's how much money he made for the year. Yep. What'd you say? Having money in a savings account at the bank. Mhm. Yep. So yeah, the bank interest comes from he's got probably bank accounts, whether he's got CDs, savings accounts, whatever he's got. It's just money that he's earned for the year from the bank. So we add them all up, and it's $93,683.62. All right, so that's all the income that came in from all of his jobs, his bank, all of that. Yes. You can get in trouble. It's called tax fraud. Yeah, you don't want to do that. They do find that out. The question was, what if you don't put that other income on there? Like, will you get in trouble for that? And it's yes. You will get a 1099 form. Like, when you get W-2s by the end of January, you'll get 1099s from the bank and, like, from your stocks. So they also send you paperwork that has, like, those totals on it for you. So it's not like you got to figure that out. It'll come to you. Yeah. I don't think you have to pay. Don't quote me, but I don't think you pay anything on those until you actually cash those in. So it's not actual money that's in hand right now, so you don't have to worry about that. Yeah, so not until you actually cash those in, then you'll pay taxes on it then. Yeah, so that's nice that you have stuff out there. All right, so Noah is single. Noah is single. You're not married, so you're considered single. Don't tell your girlfriend you're single, but in the tax world, you're single. I'm single. According to taxes, you're single. He has a taxable income for last year of $54,982.98. Right? His employer withheld $12,875.93 in federal taxes. All right, so use the tax tables booklet to determine Noah's tax. So his taxable income is over $54,000. So let's go to your booklet. Everybody find where $54,000 would fall. $54,982. And he is single. So how much tax? $8,034. So based on his taxes, he should have to, he owes $8,034. So will he get a refund? Yes, because how much was taken out? Over $12,000. So will he get a refund? Yes. He overpaid. That is why you get refunds, though. It's because throughout the year they took out more than they actually needed to. So they pay you back that difference. So find the difference between his tax and the amount withheld. So we just need to take $12,875.93 and subtract the $8,034. $4,000 what? Is that what you got? Yes? Okay. I just want to make sure I heard you right. Yeah. Mm-hmm. It is. Because it can change based on the amount of income you make. It can put you in different tax brackets. All right. So number 4, all right? So Elizabeth Allison is a food editor for a magazine. She has received a W-2 form from her employer and a 1099 from her savings bank. Okay, so again, 1099 is kind of like a W-2 almost, but it's like money that you earn from your bank account or from stocks or something like that. So Elizabeth is filing her taxes as a single taxpayer, filed her taxes. All right, so take a look. This is her W-2, right here. If you guys remember, recognize this box is up here. We worked through these on your quiz, right? That was the last question. All right, and then this form right here is her 1099. It's got the bank interest, so she earned $956 in interest on like whatever savings and stuff she had at the bank. Okay. 1099 is what will come from like the bank or the stock market. So you'll get a W-2 from your employer. 1099 says the money that you earned on a bank account or stock market. So you will get this by the end of January. You would get that in the mail. Yes, this is income that you earned by having like savings, money sitting in the bank earning interest. Yes. Yes. Did you not know that? Yeah, there's different types of savings accounts. So like a regular savings account doesn't earn very high interest, but like there's different CDs and different things that you can invest your money in at the bank for a savings account that earns higher interest. Checking accounts usually earn less interest than a savings account. Mm-hmm. Free checking? I think the interest on those is very low. The next chapter we talk about is all about those kind of accounts. So we'll get more into that then. All right, guys. So go ahead and flip the page in your notes. Yay! So we're going to go through this together. It's really not terrible. I'm telling you, it is not terrible to fill these out. Hey, guys. Thank you. All right, so let's go through what is required for you to fill out. Okay, so like when we take our test on Monday, you will have to fill out, I think I have 3, I believe, on your test that you will fill out. They're not terrible, okay? So the first part, filing status. What did it say about Elizabeth? It says that she is single. So you will go ahead and check. You can put an X over it. You can check mark it, whatever you want. Doesn't matter. Something to indicate the single box. Yeah, probably. Mm-hmm. Yeah. Yeah, either way. It's just so that they know exactly which one you're marking. That's fine. So first name and initial. So we don't have her middle name, so we can write, though, Elizabeth. And then her last name, which is Allison. Okay, how about social security number? Yeah, if you look on your notes at the very top of her W-2, thank you. At the top of her W-2, it has it on as just zeros. Sometimes it has it in there as actual numbers, but we'll fill in her zeros. Yeah. All right, so your standard deduction. Someone can claim you as a dependent, or you were born before January 2nd, 1954, or you are blind. All of those kind of affect where you kind of go with this. We're going to look at some pretty straightforward examples. Obviously, there are so many different possibilities for different people, but we're going to kind of look at the most common ones. In other words, on this one, is she a child that her parent is claiming her? No, so you would not check that. Now, for you guys, if your parents claim you, you would have to check that. If you flip your paper over, your back of that tax form, if you check that box, you have to fill out and do this little worksheet right here. Tomorrow we'll look more at ones like that, okay? So for you guys, if your parents claim you, then you'd have to fill out this back, okay? Yeah. Mm-hmm. Yes. Yes, you can. Yeah, you just need to contact wherever you work, whatever your department that is at work, and they can change it. All right, so if joint return, your spouse's first name and initial, she is single, so we don't have to fill anything out there, okay? Nope, just leave them blank. Nope, leave them blank. So spouse standard deduction, We don't have to worry about the spouse because she's not married. Home address. Do we have her address? Yeah. Look on her W-2 form. So let's fill in her address, 6204 Lincoln Street. It does. That's funny. And let's go 6204. It's the first one. That is funny. I never caught that. So Philadelphia. All right. So Philadelphia, Pennsylvania, 19144. All right. So looking over here, so she didn't have a spouse. We don't have to worry about that. Presidential election campaign, we're not going to ever worry about that. That's more specific things. If more than 4 dependents, see instructions and check here. We won't deal with any that have more than 4 kids, okay? Because that just gets into a whole lot more stuff that it's just not necessary for you guys to know right now. All right, so dependents. So if you have kids, this is where they get listed. Does she have any kids? No, so we don't have to worry about that. All right, sign here. So this is her signature saying that everything up here is correct. So go ahead and sign for Elizabeth. Don't. All right. Today is the 9th. It's what? Okay. It's fine. Doesn't matter. All right. So let's go through then which lines you have to fill out. Because there's a lot of lines here, but a lot of them you don't fill out, and we're just going to leave blank because they just don't apply to her. All right, so line 1, wages, salaries, tips, etc. Attach form W-2. So this is where you look at her W-2. Where's her wages, salary, tip, etc.? What box is that? Is box 1, 83,600. So 83,600. Yes. Just leave it blank. Now you guys would actually put your occupation, but don't worry about it for here. All right. Line 2. Guys, look at line 2. It has a 2A and then a B. Okay. This is tax exempt interest. So did she have any interest? So the tax exempt is the A part. I will never give you anything as tax exempt interest, okay? Because it's just a rarity to have that. Now there's taxable interest. Did she have bank interest? Yes, that is 956. So you guys, don't worry about A, B. It all just kind of goes on the same line over here. So when it says taxable interest, this is what I'm looking for as the bank interest. Just so you guys are aware. That's where that's coming from. Line 3, qualified dividends or ordinary dividends. I will never give you the qualified. Again, all this stuff right in here is very rare, so we're not even going to talk about it. Dividends refers to what? That's stocks. Did she have any stock stuff? No. So do I write anything? No, I leave it blank. All right, line 4, IRA, pension, and annuities. Did it talk about any of that stuff? Nope. If they don't list any of it, it's blank. It just doesn't apply to her. Line 5, Social Security benefits. Did it say anything that she earned Social Security money? Nope. Line 6, total income. There we go. And look, it's kind of dummy proof. Add lines 1 through 5. Yay, I can do that. Right? We're just going to add our lines. So 83,600 plus 956. Good. 84,556. All right, so far looking at this, line 1, line 2, sometimes line 3 is probably the lines you're going to fill out. I probably won't give you any of the other stuff. And then you'll do line 6 because that's just adding it all up. Okay? Line 7, adjusted gross income. If you have no adjustments to income, enter the amount from line 6. Otherwise, subtract Schedule 1, line 36 from line 6. Did I give you a Schedule 1? No, so I'm not worried about it. Okay, so it says, if you have no adjustments, enter the amount from line 6. So I'm just going to rewrite 84,556. Yep, in line 7. All right. Yes. There's no change. So some people leave it blank. I just, kind of like when I write a check, I just kind of draw a line at the end so people can't add something to it later, kind of thing. I'm too lazy to write 2 zeros. All right, line 8, standard deduction. Do you guys see it's in bold? What do you think that means? Yeah, we got to have some there. Okay, everyone's going to have this. Now, do you notice line 8? Do you see how it opens up to this big box on the side? So the number you get will come from this big box on the side. So standard deduction. If you are single or married filing separately, you're going to write down 12,000. If you are married filing jointly or a qualified widower, you write down 24,000. If you are head of household, 18,000. So she is single, so it is 12,000. So I'm going to write down 12,000 on this line. The government allows a standard deduction, meaning it's just a guaranteed number you will get to subtract from your income so you pay less taxes. Okay? It's just automatic. Now that number, I believe, going from memory, I think it was like 6,000 before they redid the tax laws. So they changed it to 12. So it's a bigger number you can subtract to lower your income, which is good. All right, so line 9. So you always will fill out this line. Qualified business income deduction. That's a rarity. Taxable income. We talked about taxable income a lot? Yes, we've seen that word a lot. We need line 10. It tells you subtract lines 8 and 9 from line 7. Well, I didn't have anything on 9. So here's all my income I had coming in, 84,556. The government allows me a guaranteed amount to subtract off. So I'm going to write that answer here, which is 72,556. So already the number I'm going to look up in that tax booklet has dropped, which is good. Line 11, tax. And it's got all kinds of things written there. We actually don't ever put those on here anywhere because you don't get that back. Not until you retire does that pay for all that stuff for you. All right, so does anything go on line 11? What do you think? No? Okay. This line is where you look up in the tax booklet. Okay? So this is where you look at your booklet and you look this up. So grab your tax booklet. You were looking up the 72,556. 72,556. She is single. Good. 11,906. All right. Line 12, child tax credit, or she doesn't have any kids. Subtract line 12 from line 11. Okay. So subtract line 12. There's nothing there. So it's the same. So 11,906. Line 14, other taxes. I'm not giving you anything else here. Don't worry about that. So then line 15, total tax. Add lines 13 and 14. It's still the same thing. Okay. Line 16, federal income tax withheld from forms W-2 and 1099. So come back to her W-2s. Which box tells you how much income taxes or federal tax was actually withheld? Box 2. Right? So this, I'm going to look at box 2. And it says 15,884. So right now, can you tell me, is she going to get a refund or is she going to owe? She's going to get a refund. Because right here, this $11,906 is how much tax that she should pay for the year. This is how much she's already paid. She's overpaid. So if you look then at next line, refundable credits, I'm never going to give you any of this, so don't worry about it. Add line 16 and 17. So same thing, 15,884. $19. See here, there's refund, and then there's amount you owe. So we've already established, where does she fall? She's a refund. If line 18 is more than line 15, is 18 more than 15? Yes. Okay, then subtract line 15 from line 18. So we just need to subtract those and see how much of a refund she gets. So 15,884 minus 11,906. Good. 3,978. And then there's options on here if you want it all refunded, if you want it to go different places, blah, blah, blah. We're not going to worry about filling out any of that. You can also specify, you can have it directly deposited into whatever bank account you want, so that kind of thing. But I'm looking at, she gets a refund of $3,978. If she had owed, you would have skipped the refund section, obviously, and jumped down to amount you owe, and it still tells you to subtract, and then you would put down how much that she actually owes. So really, was that bad? A little tedious at first until you get more comfortable, but it's not bad. Yeah. Sure. No, we are not done. Yeah. Guys, we are not done. We have a lot to get through today. I want to keep going. Stop whining. Not right now. Stop whining. All right. So tax deductions versus tax credits. So tax deductions and tax credits are used to lower or reduce your taxes. Right? Anything I can kind of put in those accounts pre-tax helps us out, right? It drops that number I'm looking up in my tax booklet, I pay less tax. So all tax deductions and tax credits are subject to certain limitations and restrictions. If you use a rule to your advantage to lower your tax burden, it's not breaking a law. I know somebody else, either this class or my other class, was like, oh my gosh, we're allowed to legally change how much taxes I pay. No, there's laws that allow you to. That's called tax avoidance. That is legal. Tax avoidance is legal. If you lie about items on your tax return, you are committing tax evasion, very good, Josh, which is a crime. So using the laws to your benefit so you pay less is tax avoidance. That's legal, okay? Because you're using the laws in place. You're doing, like I have kids, so I get to use child tax credits, so it lowers my taxes and things like that. But if I just lie and lower them, that's tax evasion. You can get in big trouble for that. All right, so just kind of giving you guys an example here. So would you rather have a $10,000 tax deduction or a $10,000 tax credit? So there's two different ways that these things work on your taxes depending on what you're looking at. There's deductions and credits. So just so we can kind of look and see the difference here. AGI stands for adjusted gross income. So that's how much money you make. So let's say we're looking at somebody who makes $100,000. So if you have a tax deduction, guys pay attention, you need to know the difference. A tax deduction deducts $10,000 from your income, so now my income is $90,000. Okay? So if you're using it as a credit, I'm still looking at $100,000 as my income. I didn't get to subtract that off. Let's say the tax rate is 25%. So calculated tax, the taxes then I would have to pay is $22,500. Over here it's $25,000. But if I get to use a tax credit, that gets subtracted from the tax I owe, so now I only owe $15,000 in tax, whereas this one stays the $22,500. So what helps you out more, deductions or credits? Credits. Yeah, tax credits get subtracted off the tax you owe. Tax deductions subtract off your income. So it changes the number you look up in the tax booklet. So credits help you out faster than deductions do. Okay, does that make sense? Credits come from the taxes you owe, deductions come off your income. Okay, sometimes that's hard to kind of understand. All right, so there is one of the schedules that's the most commonly used is Schedule A. It's where you itemize, where I told you I used to itemize all the time. I tried to itemize last year because that was the first year the tax laws changed, and it didn't get me anywhere. So, but this allows you to list your deductions that are not part of that regular 1040 form that we just filled out. So like if you have a lot of medical expenses, your property taxes, like I own my own home, so I pay property taxes, state and local income taxes that you pay, casualty and theft losses. So if your home's broken into, your house floods, you have to pay money for that. Mortgage interest paid. I have a mortgage on my house, so I pay interest on that for the year. And then any charitable contributions. You donate money to different charities, to church, you donate stuff to Goodwill and get receipts when you donate, anything like that. Okay? So if you have any of that stuff, you can itemize to try to like lower your income based on this stuff. Now, over 80% of people will not itemize, and they'll take that standard deduction. So what was the standard deduction for Elizabeth? It was line 8, it opened up in that column. It was $12,000 because she was single. So in other words, for it to help her to fill out the schedule, she would have to have over $12,000 of this stuff that they allow you to claim for it to be worth it, to get a bigger standard deduction off of your taxes. Okay, does that make sense? If you don't have more than $12,000, for me, I'm married, so ours is a $24,000 deduction, just standard. It used to be a lot lower than that, so this would always help me. But now, it's kind of a wash. That's about what we would deduct normally, is about $24,000 worth of stuff. But that's the standard now, so it doesn't even matter. Yeah. It could be, yes. The only problem with that is, like the medical stuff, they only, like whatever your grand total is, they only, I don't know off the top of my head what the percent is, but they only let you claim a percentage of that. So if you spent 20 grand in medical expenses, you might get like to claim 30% of it. So, what? Mm-hmm. It helps track some of that. Yeah, Elena? I don't think so. Nope. But again, it's only a percentage. I'd have to look that up because I used to know it, but it changed, so I don't know what the exact percentage is anymore. So again, most people, 80% take the standard deduction, which we just kind of looked at. It's $12,000 for single or filing separately. $24,000. Do you remember what head of household was? It was $18,000. Good. Yeah, so since husband and I were married, so we get to subtract $24,000. Now, is that a deduction or a credit? Where does that get subtracted from? Deduction, because it gets subtracted from our income. I wish it got subtracted from the tax. It'd be beautiful. But we do get a tax credit from our kids. So that allows us to subtract off our taxes owed based on our kids. Yeah. Kids help you one time a year on taxes. That's why some people, like when they're like due in like late December, early January, they're like, come on, let me have them in December. It's an extra tax credit for that year, as long as they're born before the new year. Their tax credit would not affect until the next year's taxes. Yeah, because it's always that previous year, January to December. Yeah, so if you're born January 1st, your parents don't get that credit until the next year. Yeah. I couldn't get my tax credit for that. All right, so again, tax credits, amount you subtract from your tax after you looked it up in the tax table, right? We just kind of looked at that comparison of them. Deductions are subtracted from your income before you look it up on the tax table. All right, so you can get tax credits for things like green purchases. What are green purchases? No, not a green card. What are green purchases? Anybody know what that means? Nope, not your bills. A what? Nope. Nope. Wow, I'm surprised you guys didn't know this one. If you're going green, that you're buying like energy efficient appliances, you're installing solar panels on your house, you're doing something for the environment, like, you know what I mean? You're buying appliances that are helping things out. So, like we bought an air conditioner that was green, it's more energy efficient air conditioner a couple years ago, we got to count that. Okay. Hmm. Like washer and dryer and stuff like that. Yeah, you can. Yeah, guys. They could. But again, you'd have to do itemized deductions, filling out that Schedule A, and it would have to equate to more than the standard deduction. And it's, again, only a percentage of those actually get counted towards it. So, like, don't think I buy a $20,000 vehicle that goes for work that I get to deduct 20,000. It's only a percent of it that qualifies. Yeah. Yes. I'm pretty sure it would be. But yes, I'm pretty sure that does qualify. Sure. All right, so child tax credit. So again, I have 3 kids, so this is a beautiful thing because this doubled from what it used to be. Hey guys. So tax credit of $2,000 per child dependent. So how much do I get as a tax credit? I get $6,000 because I have 3 kids. $6,000 tax credit. So once I figure out how much taxes I owe, I get to subtract $6,000 off of that because I have 3 kids. All right. Now this credit does start to phase out if you are single and make more than $200,000, or if you're married and you make more than $400,000. I'm never coming close to that, so I'm okay. Elena? No, it's this tax credit is all the same. Sorry. Adam? Depends on who it depends on who's claiming them on their taxes. Like if your parents are still claiming you, then they can still get that credit. Now, if you are claiming yourself on your taxes, then they cannot claim you. You can't be claimed by more than one person. Yeah. Mhm. The adoption things goes through a whole different thing. Like she gets amazing if she actually adopts you before the end of the year, then they get amazing tax credits for that, for adoption. Hmm. I had a friend who adopted a child, and she got a huge tax return because all that went towards that. I'm not sure what age that phases out. I don't know. I'm not well versed in that rule. Yeah, so I'm not really sure. No, you were not 13. All right. So 2 popular tax credits though. We've talked about the child one, right? So there's having the child tax credit just for having kids. Noah. But there's a child care tax credit. So if you pay like for daycare for your kids, right? You go to work, your kids go to daycare, you can claim that on your taxes and get a credit for it. So or even if you're paying for them to go to summer camp or something like that, it has to be a qualifying child under the age of 13, so there's that age 13, or a disabled dependent. Then you qualify for a tax credit of up to 35% of qualifying expenses of $3,000 for one child or $6,000 for 2 or more. So in other words, if you pay a daycare for your child, and let's say you paid $6,000. I have 1 kid, I paid $6,000 for the year. They're only going to let it go up to $3,000, and then they'll take 35% of $3,000 and they give that to you as a credit. So that would subtract off the taxes you owe. So it's another way that you can kind of save some money if you're paying that. If I have 2 kids, it allows me to go up to $6,000. They take 35% of $6,000. So anything up to that point. Okay. Now, if your aunt, or your cousin watches them and you pay them under the table, you can't claim it. Okay, because they need a tax ID number through the government that shows that they are paying taxes on the money that they're earning in order to get that credit. So if you're paying your mom, your dad, or somebody to because my dad watches my youngest during the day, and I mean I pay him because he drives to my house every day, but I can't claim it because he doesn't. It's just under the table, so I don't get to claim that. Earned income credits. It's a tax credit for working people with low to moderate income. If the adjusted gross income is less than $55,000, check to see if you qualify. And again, there's a lot of rules here, so I can't give you a clear-cut answer. But it depends on the number of kids you have, your marital status, how much money you make. Like you could get a tax credit though just because you don't make a whole lot of money. So that's an earned income credit. All right, so let's go ahead and try one last 1040 today. So we have Kenya and Robin Omar. They are married with one child. Kenya is a pharmacist and Robin is a store manager. Their W-2 forms are shown. They received $987 in interest on bank deposits and $1,200 in stock dividends. Normally they would get a 1099. I just did not create one to add onto the notes. Okay, normally they'd have a form for that though. All right, so do the Omars get a refund or owe the government? In either case, determine that amount. So we're going to actually go through and file their taxes. We're going to figure this out. All right, so you guys ready? Yes. So here we go. So filing status, they will be married filing jointly. First name and initial. So Kenya Omar. Kenya Omar. If you have a middle initial, it would go there. It doesn't matter. And then social security number. They're all zeros again. Tomorrow, the ones I give you actually have social security numbers. All right, can someone claim Kenya? No. Now, again, we'll look at one tomorrow where it's like a teenager, somebody who's in high school who has a job. Then we'll have to check that box, and we'll do that. Today, we won't worry about it. If joint return, the spouse's first name. This is Robin Omar. And unfortunately, it's all zeros again. You're right. That's not true. All right. And again, no one's claiming the spouse. All right. So home address. 14 Rachel Drive. You know these people, do you? Is there really a Walnut Creek, Ohio? Is there? I don't know. All right. Dependents. Do we have a dependent? It just says one child. They didn't give us the name, but so one child. Baby, oh, I don't care. If you don't have a name, you can just write child 1, child 2. I don't care. I just wrote one child. And we'll assume the social is the same as their parents, right? Relationship to you, child. Will this child qualify for a child tax credit? Yes. All right. So then sign here. So we have, that's Rachel, right? No, it's not Rachel. That was where they lived. Kenya. No, it's just the parents and then Robin. Today is the 9th. And then we won't worry about occupation. All right. So how easy should it be for you guys to earn points on this part of the 1040? Extremely easy. Don't miss something easy like the signature, marking what their status is, right? Easy things. Don't sign the wrong name. Just sign the best you can. I'm not going to grade you on your cursive. Don't worry about occupation. I'm not worried about it. All right, so here we go. Let's go through the hard part. So line 1, wages, salaries, tips. We have to add them. Yes. So since there is 2 of them, we will add. So that's box 1 on both. So 65,120.97 plus 52,126.76. Do we put change? No. Will it round up or stay? It would round up because it was 73 cents. So 117,240 was 47, so it'll be 48. Okay, remember no change on the 1040. 248. All right. So 2A. So do we have any taxable interest? Anything from a bank? 987. So again, the taxable interest, this is from the bank. What's dividends? That's stock. Do we have stock? Sure. 1,200. Yep. So 1,200 for stocks. Don't worry about the 4A, 5A. We don't have any of those. So line 6, total income. Add lines 1 through 5. So we are going to add all this. So 117, 248 plus 987 plus 1,200. Good. So $119,435. That was from the stocks. Oh yeah, 1,200. Questions so far? Stop me if there's anything I do that you don't understand, okay? Will you wake him up? Good morning, sunshine. 987. In the paragraph at the top, it says that they received that in bank interest. Yeah, I just didn't do the 1099 form on here. All right, so line 7, adjusted gross income. We don't have anything to adjust, so just enter this again. So 119,435. All right, so line 8. Again, line 8 opens to this big box. So what is their standard deduction? 24,000. They are married filing jointly. So 24,000. If their income was to stay at the 119, would you be able to look in your tax booklet? You'd have to go to the back of that tax booklet and do those tables, right? Like that. But once I take off their standard deduction, it's going to drop below 100. All right, so line 9, qualified business income. We don't have to worry about that. Line 10, taxable income. Subtract lines 8 and 9 from line 7. Subtract 8 and 9 from 7. So you're going to take your 119,435, subtract 24,000. You forgot a 0. So that is line 10. So it's going to be 435. There you go. That's right. All right. So line 11, when it says tax, what do I look at? This is where you look at your booklet. So you're going to your tax booklet. We're looking up 95,435. $95,435. Make sure you look in the right column. Married filing jointly. What did you say? That is correct. 12,873. Are we okay with looking that up in the booklet? Okay. She's looking at real fast. Yeah, I know I hadn't even looked it up yet. She was already there. All right, line 12, child tax credit. How much do you get per child? $2,000. So right here is $2,000. I'm going to write on my line because there is a child. What if she had 2 kids? What would you write? 4,000. Yeah, it's 2,000 per child. Okay, so we didn't have that on the last one. Subtract line 12 from line 11. Good, so 10,873. So we're lowering, isn't that nice? That came right off the taxes we owed. Having kids can help out sometimes. All right, other taxes, we're not going to have any of that. So total tax, add lines 13 and 14, 10,873. If you notice that there's a lot of lines, you're just repeating what you had above. Yeah, so just kind of read through. Line 16, federal income tax withheld from the W-2. So come back to your W-2s, and what do I have to do with them? I have to add them. Good. So that is box 2. So 8,765.99 plus 6,198.65. 14,964.64. Do I round up? Yes, because we don't want change. Good. So 14,965. So stop right now before I do anything else. They said I owed 10,873. I paid in 14,965. I'm going to get a refund. I overpaid. Okay? So looking down here. So again, we just did line 16. 17, I'm not going to have any of this. So 18 says just to add those. So it's still 14,965. So we already established it's a refund. So how much money? 4,092. And that is the refund they are going to get. So what do you think? We filled out two 1040s. How are they? You feel like you can do your own now? Good. And your guys' will be very simple, so you probably could do it pretty easily on your own.